Welcome, dear viewers, to the new issue of the Grey Market Talk with Nic Themistocli, Portfolio Manager Extraordinaire, and Thorsten Wegener, former retired option market maker, not so extraordinaire, but very trigger happy. I hope you will enjoy what we're talking about. And as we're always striving to improve, we've split it into three sections today. At the beginning, we want to give you an overview about some political situation developing in Europe, which could be very interesting for a long-term investor. We are both living in Europe, so you might be interested in our views. Then I had the slight suspicion that, Nic, you don't have to mention it, that Nic, who was talking for Japan for a while now, seems to get ripped off by a lot of people who are getting interested. And thanks to the fine people at Schroders, we have a beautiful chart deck we want to show you with some very interesting thoughts, which I obviously had heard before from Nic. That's why I'm quite keen about it. And we will always have a look, especially now as extreme greed creeps into the market again, in the technicals under the hood. I hope you enjoy that. Nic is already on the screen. And I shall share my, I call them quite interesting slides. And Nic, you tell me when you see them on the screen.
Yeah, there are.
Excellent. I called them quite interesting slides because when I'm with my students, that is one of the good starting points. How do I look at market? And obviously get a lot of research, like most of you probably as well. And there are always some things that stick out. And this week, it started actually with a fantastic meme you have in front of you now. For those who don't speak German, it principally says that this is the election team for the AfD, the German opposition party, which is to the right of the middle. And what you can see here as the best election team for this party is the current government we have, which is a big laugh, but only to a certain degree, because what has happened at the moment in Germany, the markets, I'm calling it market surveys, the political surveys say that the AfD, which is right to the center, has now, in the opinion polls, 20%, maybe even more before the next election. Maybe I'll give you a quick explanation first what we have in Germany. We have the communists, which is the PDS, Partei des Demokratischen Sozialismus, which is a leftover from the DDR time. We had their very tiny, very small, not really important, their opposition. Then we have the original conservatives, the CDU, Christlich-Demokratische Union. They are now also left of the middle. You can only say that as it is. They are in the opposition, and then we have the government. Government constitutes out of the German Labour Party, Social Democrats. They're obviously left. Then the Greens, Green Party, they are very left. And then we have the Liberal Democrats, which used to be center, but are now pretty much left. And they're not liberal like in the American sense. They used to be the party for business and economy and citizens' rights. They are running the show at the moment. And as you followed the news, obviously it's not looking very good in Germany at the moment. So what's going on there? What can we see right now? With the AfD, a party people find, what's the right word, Nic? Unsavory? A little bit, because they have some very unsavory characters in there. Is gaining momentum, even though a lot of people would never vote them because they really don't like this, well, this smell of right politics in Germany. It's a historical thing, and I completely understand that. However, the mechanics for the next election, which are coming up in 25, are very serious, because if the AfD is improving further to 25%, then we can't have in Germany with the traditional parties a grand coalition even anymore. So the AfD would have to be in a potential government if, and that's the big thing we are focusing on at the moment, if not all the other parties work together. And that's where we turn again a minus into a plus with a gray beard. I have seen the DDR, the GDR in Germany. They also had that. It was called a block party system over there. They combined all parties of all strength into one big unity party, which then was run by the left. And you have seen that the DDR was not the shining beacon of democracy or economic development or anything. Like the Soviet Union, it went down the tubes of history. And well, we had this conversation of end of history, or was it Fukuyama, the Japanese economist, and that could never happen. So at the moment, we are seeing something developing. If this arithmetic in the market, in the political election process comes to materialize, that we see a one-block party government, because nobody wants to play with the AfD, with the right to the middle guys. And Nic, you tell me, how does that help? Let's call it a free market economy. If we have a government like this, you have more experience, you're a bit older, shoot away.
Oh, that's a really tough question. Politics never helps, right? And the more politics you throw in the politicians, the less people think about the country. And I actually think that if you have a look around what's going on, and it's not just sort of in Germany, and it's not just because of, you know, the different circumstances we're in now to where we've been before. Even in the US, it's all about politics. And when it's all about politics, it's not about the people. And when it's not about the people, it's about sort of control again. And, you know, we're back to the discussion that we had last week, I think it was, where we started to talk about, you know, where is this thing going? And it looks more and more to the point where, you know, the governments want a much closer control over everything. And, you know, the fact that you just chuck a bunch of different parties together and hope that, you know, they'll kind of figure it out. Well, I mean, you know, you're in that situation, if you like, in the EU. You can't, you know, the more people you get together, you can't get decisions because everyone wants something, right? But, you know, too much politics is never good. And, you know, one example, and this is sort of a bit of a left field thing, maybe we'll pick it up later again, you know, the regulator is in the States is turning political. So the SEC this week sued Binance and Coinbase. That's nothing to do with the regulation. That sounds more to do with politics than it is to do with regulation. And as I say, if there's just far too much politics, there's not enough, you know, building business, building trust, you know, encouraging people for the future. And in the end, you know, people just get fed up with it and just move out, you know.
You have the same situation developed this week, well, late last week, even with Boris Johnson and a couple of other MPs who are deflecting in the UK. How do you sort that in?
You're asking really good questions today, it's outrageous. Yeah, so you know, let's firstly just wind back a bit. I mean, the AfD in the polls, midterm, you kind of, it's normal, right? You normally get someone, you know, the people are a bit sort of narked about the end results of what's been achieved so far, so they kind of vote an extreme party left or right, and just to scare everyone up. Yeah. So there's got to be something to maintain this thing. I mean, they've got to continue to balls things up in order to maintain, you know, extremist votes. It's the same thing in the UK. The UK, you know, Rishi, you know, he came in controversially, if you like, because of the previous prime minister, which lasted less than the lettuce or whatever it was. And now you see it's very difficult to pick up the pieces and say, okay, we're gonna start to build, because the moment you try and do something you think is good. So the first thing he did, like everyone else we talked about last week, about these guys buying commodities and you know, high prices, and now we bring inflation everywhere. It's the same thing what politicians do. They panic. So they try to sort of cap prices of energy and whatnot. And, you know, now the energy prices are falling. Unfortunately, the people of the UK don't benefit from that. So therefore, you know, Labour voters and disheartened Conservative voters, you know, are polling against them. And I think that's just, these are warning shots to the Conservatives. And also now, I don't know if you spotted that there are now 3 MPs, and not just Boris, so the 2 others who have also resigned. You know, they have to, you know, they have to try and win these by-elections. It's a mess.
Are proper conservatives, yeah, and I don't mean the right-wing conservatives, I mean proper conservatives, yeah, who were for civil rights and the state staying out of it, are they finished in Europe? Are they finished in the UK? Are all these parties going to disappear sooner or later because they've never delivered that what the normal guy on the street who is not right-wing, who just wants to live his life or her life, are not being serviced anymore by any party of that constitution?
Well, I mean, on current form, the Conservatives aren't doing a great job. But if you look back on history and historical performance, the left were also unable to deliver their mandate and deliver growth. And if you look, I mean, forget about sort of EU and not EU, but people voted to leave Europe, not because they were anti-Europe, but because this was, you know, you ask people a question at a time when, you know, they are not benefit from this globalization. And so they vote against something and they say, well, what do you want us to vote for? That's Brexit, we'll vote against that. And we'll try something new because what's happened in the past doesn't work. So we've got to try something new. And you know, you continue to go on and on and on. And in the end of the day, politicians are trying to get stronger. They're trying to get more control. And what's good for the people is less politics. I mean, wasn't it Ronald Reagan who once, I can't remember what his actual words, but he said something like the most dangerous words are, we're from the government and we're here to help you. and that's true. And that was in the 80s. You know, this is just, they haven't managed to fix it. And that's not good.
No, well, I lived 10 years in the UK, and when the whole remaining thing, I was already living in Germany. I was actually pro-Brexit, even if I wasn't allowed to vote, because I really thought they are constructing something like Singapore on the Thames. Yeah, rates down, bureaucracy down, making England again this old powerhouse when it used to be the financial center. And now reflecting on it, I would have been a right idiot to vote for Brexit because they had an 80-seat majority, the Conservatives who won the election under Boris, and they actually did not improve anything for the man on the street. There is no upside. Prices have gone up. It's difficult to travel to Europe. The health insurance deals are out of the window. You can't just move any places anymore. There is, in the current form, how the Brexiteers have used the huge majority. They didn't change anything. They didn't change anything to the positive side of the equation. So they might as well rejoin again.
Well, we'll leave that conversation for another day. I'm not sure whether joining, you know, another ship that is having, you know, their own problems and you know, is necessarily the answer. But I think, you know, I just perhaps extend the question you asked. You said, are conservatives, you know, conservatism, you know, dead or is it not dead? I'd ask the question that, you know, the G7, you know, when you look at the major economies of the world, which has been run by these politicians over the last years, and if you were an outsider looking in, you'd probably say, actually, the way things look right now, I'm not sure that they're worth the premium anymore. Yeah. And, you know, because I'm not sure whether or not they can, you know, they have, you know, a structure and a setup that is as good as it was in the old days when people were, you know, a bit more entrepreneurial. And I go back to this sort of issue with the SEC and the Binance and Coinbase thing this week. You know, that's not good for, you know, giving confidence to an outside investor that the regulatory environment is something that you can operate from. So, you know, before you know it, the problem may be much bigger than just, are the Conservatives in or not?
Yeah. There seems to be one thing they all seem to agree upon in the whole of Europe, especially Germany and in the UK. You see the slide?
Yes.
Climate change. This is actually the fear index. Yeah, we've created the word German Angst. On this side of the chart, you can actually see what really moves the voters or the people of a nation the most. And climate change in, I think, where's it from? Ipsos Global Advisors. The world's 16% of the population are really, really worried about climate change. And then we have Germany with 31%. Right at the top. And I think even the UK Conservatives the most important point is to get the UK carbon neutral. In Germany, we want to achieve that as well. We want to, piss away all our steel, car production, everything that's energy intensive. Chemical industry is already moving out. But that seems to be the big scheme everybody is uniting behind, whether they are on the left or on the right of the political spectrum. I don't really know. I don't really know how to approach that anymore, because that is the next slide that I have on here. What's the implication for the worldwide wealth we have here, Nic?
Yes. So, you can stay on this slide or the previous slide. The bottom line is, it's all the same. What's important, I think, is, is for people to feel good. And as I say, I get very suspect about these types of polls, because if it says at the bottom there, I just saw quickly, please, you can check the methodology and the questions that were asked. I'm sure it was a proper poll, but, sometimes if you ask people a question, they'll just tick something. And you can quite easily steer people in these polls. And they've been wrong very often. But let's just assume, the tendency is correct, that the Europeans have much more concern about climate change than they do about anything else. And then you say to them, oh, by the way, where are you in the wealth scale? And if, there's a big arrow here for the USA and having twice the national income of Slovakia, but being the poor people being the same as the poor people in Slovakia. My problem here on this slide is Italy. Italy has been part of the EU for, since the EU, part of the single currency. And, when I look at their average national income on this chart and the level of income for the low income groups, this is unacceptable.
Are we allowed to question the validity of the figures we get out of Italy?
As I say, I'm always very suspect on these things, but even if you say they're half truths, this is not a good message for what how the EU benefits, people, being part of the EU. I mean, the Italians probably didn't, if you showed that chart to them before they joined and said, well, that's what it's going to look like in 30 years' time. Are you in or not? I mean, I'm sure they'd think twice about it. So
that's tying again the earlier conversation we had. The poorer people are, the more likely they're going to vote for the extremes of the political spectrum. And we've seen it with Mrs. Meloni in Italy, even though I don't think she's extreme, but she's representing the far right, as it always called. And we've seen that move already here. So the question is the wealth effects, if we have them here in Germany. Oh, I'm getting my coffee, darling. That's all right. Thank you very much. You're now on air in the back. Yeah, got a coffee. Lovely. If we see that happening now in Germany, and we will see a wealth reduction without any doubt, it just makes it more likely that we'll either move far more to the left or far more to the right. The same is true for the United Kingdom and obviously for the whole of Europe. So as a long-term investor, would I wanted to have invest at the beginning of the Soviet Union in heavy industry when the dream was still alive?
Well, we still have to give these people some credibility. Yeah. They understand that there's a problem ahead of them. They understand that they believe, at least, that they need to do more for this climate change. And, and they have at the same time poor people in their country that, they really want to get from the lower scale much closer to the upper scale. And, the left wingers amongst them would say, well, that's easy. Just tax the people who earn the money and give it to the people who don't have it. And there we are. We've actually solved the gap. But, they've got a wonderful opportunity right now to spend the money on, capital expenditure for their grids, for their energy, for the future, for technology, for venture capital, for all of this stuff. And, this is an opportunity for them. So the left are going to love it because you're putting money into the world, and the right will love it because the economy is going to grow, and actually it will be a great thing for everybody because this will be real growth. I mean, the story about liquidity that Michael Howe from Cross Border Capital, he's been the one who has been talking this thing for a very long time, and I must say he talks an awful lot of sense. And the big thing about liquidity is that up until now, because of the huge debt situation around the world, effectively, he says, look, there's 350 trillion of debt around the world, average maturity about 5 years. So that means you need to refinance 70 trillion a year. Yep. So 70 trillion a year needs to be refinanced. How much is actually for new finance rather than refinance? And so we're no longer in that sort of environment where we're putting money into new stuff. All we're doing is going back to the bank and saying, oh, I've got this debt, I bought some real estate, I've got this revolving facility on my company. Can I just renew all of this stuff? And there's no building going on. And, these politicians have got a chance to build, to, think about where does the allocation of money go? And, I'm sure I have not looked, I've not examined the science. I'm not a scientist. I'm not examining the reports, but perhaps someone needs to explain whether the amount of money that they want to invest in climate change and technologies and all of this stuff will generate benefit for the people much greater than, for example, putting the money in finding a cure for cancer, finding some energy, without saying it has to be, green at the start. Yeah. And still, even with your energy philosophy that you've got right now, you still have to make sure that you've got enough energy that takes you through that transition. I really don't believe that they've thought about that. They've just switched things off. Yeah. And kind of said, well, we've got a zero target up there. Well, let's switch off that and that because we don't like them. And then they kind of say, well, hang on a minute, we've got to run an economy here. Oh, let's go to the Arab states and see if we can get a load of gas from them. And it's kind of panic merchants. One last thing coming on that, the net effect of all of these green policies that the Greens have, Habeck, for example, he runs around, lifts a load of gas from everyone. And well, I mean, he's taken the gas that would otherwise go to another country who now has no other choice but to burn coal. Yeah. So are these really green policies?
Well, I wanted actually to finish on that point with, if I would have to write a report card, and if you leave a job in Germany, we're very keen on writing report cards for. One of the killer phrases is he or she meant well. That means actually, hey, well, you're nice, you're really trying hard, but sorry, it's not really quite working if you use your brain. So yes, I think these people mean well. Maybe one last thing. I made a trip to the DDR in '87 with school together, and it was actually interesting. The moment you crossed the border from the Bundesrepublik into the GDR, it was as if somebody sucked the color out of the country. Environment was horrible. It was absolutely rubbish. Why? Because they didn't have the money to look after the environment. And that is one of the points a lot of people forget. You need to have money to follow all these policies. If you destroy the industrial foundation of it all, you end up in a huge big pickle sooner or later. Anyway, Nic, we've talked too much about politics already. I'm going to make a hard break now and bring your real expertise in, because I share the next a slide I have on here. I skipped one because that seemed to be a bit boring at the moment, but this is right up your alley. No, wait a second. Share screen.
That did work, whatever you're trying to do.
This should be right up your alley. It's the classical 60-40 portfolio.
It's clear that politics is not up my alley. And rightly so, because that's not what we do. We focus on other things. Yes, the 60-40 portfolio yield. So that's a current return. You're showing a current return of the of the portfolio.
What the line under which I found it was obviously more a promotional part for the actively managed fund management. The line that came down was pretty much passive investing is dead. It's not going to do it for the future. You can't just put your money into a bond ETF and into an equity ETF and hope for the best. We are right now here where let's say the stock pickers or the risk pickers are asked again to actually get out of this abysmal situation, which the 60-40 portfolio for decades very successfully delivered. And now it's time to return back to the actively managed approach. Does that ring a bell with you, or?
Yeah, I mean, it's not just about active management, but, you know, the 60-40 portfolio suffers from, you know, one fatal flaw. And that is the moment you've got inflation, then it doesn't work. So because the bonds fall and raise the cost of financing, and therefore the equities fall. And so, you know, there are 3 times, I think, in history when the 60-40 portfolio really didn't work. And I think it was in the 30s to 40s and I think it was late 60s or 70s. And you know, you're in that situation right now, and you were in this. I mean, we've been talking about, you know, don't buy bonds for absolutely, well, since we started our company, and it's normal for investors to have an allocation of equity, and then you blend in an allocation of fixed income. And we didn't do that. I mean, the only fixed income we had was in the Asian markets, but nothing in and government, not corporate. So our belief was inflation will just eat your money away, and therefore having this stabilizer. So the bond part is a stabilizer. So when the equities fall down, you're supposed to be able to get money from bonds, but it's not a stabilizer in a world of inflation. It's a noose around your neck. And therefore, we've substituted fixed income to alternatives. So we have, you know, macro part of the portfolio, we have yield curve plays, we have high yield plays, and so on and so forth. Different to, let's just say, a classical fixed income portfolio, because if you have fixed income, you can just already write a 0 or a minus number in the 40 part, because the 60-40 is, you know, so the American thing is 60% equity, 40% bonds. You can write a 0 or a minus and don't bother, right? So you have to find a way to make up for that, and for a while now, and then you think, okay, so what does the world look like going forward? Surely, Nic, now that they've raised rates, that you've got, you know, let's just say 3.75 on the 10-year yield in the States, and, you know, got higher yields in Europe, surely now it's a great time to buy this stuff. Well, no, because the reality is, you know, come back to the thesis that I talked about from the first video, the governments must inflate away. And if they don't inflate away, they will kill their economies. So even though QE was stupid to begin with, they didn't really have a choice. And now they are in, they can't get out. And they've basically got to get to a point, all governments got to get to a point where the debt to GDP is much lower. And the reality is the only way to do that is to have an interest rate which is lower than the inflation rate. And then you say, okay, on that basis, why would I buy a fixed income when inflation is already higher than the yield I'm getting on bonds? There is an argument for that. I'll leave that to the side. But the reality is, you know, that just means that part of your portfolio will not cover inflation, and that's not very clever.
Well, I've heard the nice line at the beginning of the year. I actually lost money on the TLT. I thought exactly down the traditional line. So I thought, yeah, let's get in early. Now, what used to be the Widowmaker, that was the yen carry trade, right? Now the new Widowmaker seems to be the TLT trade. Thankfully, we can let our money travel around the world. And that is actually the line or the segue now I'm getting into. You spoke about Japan for quite a while now. I think you were spot on. And now the market seems to be, Well, thinking in the same direction, that Japan could be very interesting. And I mentioned in the intro this beautiful chart deck from Schroeder's, which I'm going to put on our couple of slides. When I want to invest in high yielding products, where should I go at the moment? And maybe you can say a few words to this slide deck and give us how you value their exploration of it all. Because obviously I want to have a look at Japan. I think there is money to be made in the future, maybe not in a swing trade or something very short term, but it seems to be a very good investment place for me for the coming future.
So, I mean, I don't know if this is going on Spotify. So for the people who can't see it, you know, this is a chart showing US, UK, Europe, ex-UK, Japan, and emerging markets. And it's on one side with some valuation metrics on the top. And if you just sort of take one of these metrics, it basically gives you the conclusion that, you know, the US is an expensive place to be versus pretty much everywhere else. And Europe on certain metrics is expensive and on other metrics is still fairly valued. And you know, the things that really sort of stick out in a way are the fact that both Japan and the emerging markets are relatively better valued than these other markets. But it's, you know, it comes back down to, so what, right? So you're an investor and you get this chart and you say, bloody hell, got to buy Japan, got to buy, you know, got to do this stuff. And the point is you always get shown this stuff. This is the state of the market. It's not so, it doesn't tell you that now is the time to buy because, you know, EM, you could have seen this chart, let's just say a year ago and said, oh, bloody cheap, got to buy it. And you'd still lose money. And you have to sort of combine state of the market, valuation, okay, understood, with what's the signal. And that's why I spend an inordinate amount of my time on what signals tell me when, right? And that might be combining with an Elliott wave chart, or it might be combining with some of the other tools that I use. And you know, you have to have the moment, has to be right. You have to have the moment of, you know, is it the right valuation and are we getting the signal that now is the time? And a while ago, a fair while ago, you know, it was clear to me that, and I sort of was saying this, I know it sounds really stupid, but for the last 40 years, you haven't seen new high in the Nikkei, you're going to see it. And that was primarily driven, it wasn't valuation driven. I knew that Japan was cheap. I didn't need to go and look at the numbers in the way that Japan was cheap, but there is a clear, firstly, willingness of Japan, you know, when their currency was being absolutely trashed, they have big trade deficits that they have to repatriate. And I believe that, you know, the first sort of thing is that money comes back into Japan by the Japanese themselves. And the best place to invest it is in their own companies, and rather than in necessarily, they invest in JGBs, but also in their own markets. And I think, you know, this was the kind of the start and where I said, okay, if that's the macro backdrop, do I get a signal? And yeah, I mean, the signals were fairly clear to me. And yeah, I mean, the chart is sort of fairly obvious that Japan, by sort of a number of metrics here, is very cheap.
That's what, when I looked at this chart, obviously I looked at the United States in the first line first, and price to book ratio and dividend yield looked just abysmal to me. And now we're going a little bit further down to Japan. Price to book, we are neutral. Dividend yield, we are actually on the cheap side of the market. And that brings me to the next slide. If I think in longer terms, I always like book value. I know it's very out of fashion and you can be wrong for a very, very long time. But this chart caught my attention. 53% of Japanese companies are valued below book value. So you could buy, if you could buy it at the current price, you could take it, rip it apart, and make money out of it. This is never a bad business proposition if you believe that the economy is not going to implode for whatever reason. Am I correct there? Am I thinking, or am I wrong, Nic?
Yeah, that kind of makes a lot of sense. I mean, it's not necessarily, you know, the greatest metric. And as I say, I have a natural mistrust of slides which are used in order to tell a story. That sometimes they, it can be misleading. But in this case, you could probably say, yeah. I mean, we saw it on the previous slide. Price to book, as a comparison to to other economies. I mean, it's reasonable. And if half the if companies are below book, it's the same. Someone could say, well, are these companies profitable? We see that many of the small cap US are not profitable, and therefore, actually buying them cheap, these classic value traps. You think they're cheap, but they stay cheap, and they're cheap for a reason, and you don't really get anything out of it. But I think there is this. If I wanted to sort of talk about Japan or show a slide about Japan, this wouldn't necessarily be it. But effectively, the bottom line on Japan right now is that there is growth. Their input costs are going down. They're able to raise their prices because people are getting pay rises. There is a geopolitical situation of friend shoring. So where you had production in China and they want to take it out and they spread it around, Japan is a natural beneficiary of this thing. In the same way that nearshoring, Mexico is a natural beneficiary of for the same reason. And therefore you realize that there are some things working in favor of Japan. But Japan, as I explained before, these global indices, is a relatively small amount. So you will not see anyone, being invested in anything other than, if the global index says 5-6% Japan, people might go to 10%, but they really wouldn't go any much more. And that's why, from the previous slide that you had, why the American bloc is all red, because they have a privilege. Because they are a very large part of the index, and therefore they attract the most capital. And arguably you'd say, well, of course you need to invest that capital, and therefore you need these big companies, these whopper companies, but, does it really need to be that percentage? And of course, Apple get loads and loads of money. Do they themselves invest that money? Actually, the way they invest it, partially internally and partially externally, they go and buy other companies. Yeah. Right? Because, you've got too much money, because the index says, give these guys a lot of money because capital weighted and you're a passive investor. So suddenly the money finds its way into Apple stock, and therefore, they can leverage that in their way. They go and buy other companies for it. And I think the future investment allocation, I have no idea what it really looks like, but it will look like a lot different than what it is today. In my view, less US and probably more East. And that kind of seems reasonable. When you think, Christine Lagarde talks about a bipolar world. She doesn't need to. I mean, Europe is big enough. But even in a bipolar world, why would the Asian center account for so less? Yeah. So such a little portion of the index weight. So, bottom line is where to put your money. For a long-term investor, this is not trading advice. For a long-term investor, you kind of get the feeling that that you want to be less in the Western world and more in the Eastern world. Then it's all about timing and choosing the right company and all of this stuff, or the right fund. And then that's it basically.
I agree with you, especially on the price to book ratio charts, but I had to leave this in, especially for my options guys, because the log normal distribution is bloody everywhere. In every data set you can compile, you will see it, and it tells us something, that there obviously seems to be one law of nature we will always find, and you even see a beautiful tail here. I don't know which company that might be, but hey, what do you know? That's why I had to leave it in. Let's go to the next chart. We have earnings sentiment. All European earnings revisions have turned positive. US and UK have also picked up. Nic, am I completely wrong that we'll see a bloody recession coming in huge?
Well, we've disagreed for a while now. And
yep.
And again, this is all part of the thesis. And again, this is sort of driven by the work of Michael Hout. liquidity first, and then that sort of seeps its way into the economy. And there are a lot of people who throw the copper chart and the oil charts and let's look at housing collapse, and they just throw all of this stuff. And of course, it's people sell subscriptions, and if you sell a good story, there's no one wants to buy it. So there's a lot of people who sell, that things are going to collapse worse than 1929. Well, I won't say it won't happen, but I would say that in a normal state, it's proven that liquidity in the system actually works its way in. And I looked at something on copper the other day from a technical analyst, Tom McClellan, and his sort of analysis of this thing basically shows that the commercials, the people who use this stuff in their business, are buying copper at these levels. And history has shown, more often than it hasn't shown, that when the commercials are buying stuff, it's because of something they see. And that tends to be, something in the future that is just not obvious to people who are not in the business of dealing in copper. Looking forward, copper, oil, they've all got some great stories. That's the macro. That's the state of the economy right now, state of the world right now. Everyone thinks there's something ahead, but we need the signal. We need something that identifies that these things will turn. And at the moment, they haven't turned, but evidence is more weighted towards, we don't have a recession. And if we were going to have a recession, you'd see employment collapse. You would see a much more, you see credit spreads blowing out. You'd see, real estate collapse. Now you're going to say, commercial real estate. Commercial real estate is tiny versus, real estate. And it's probably heavily weighted towards California, where people are leaving California for different reasons rather than, I've got to get out of property because there's a property collapse. I think it's just people just want to leave. And therefore, that's what happens.
Let me be then a pain in your ass, waiting for the signals, and that is obviously I obviously manipulated into a beautiful trap with this one chart. No recession 23 driven by no credit crunch, strong labor market, and you just mentioned labor numbers. Yeah, would that be the trigger, the indicator? What we see on this chart is actually availables of loans for small businesses collapsing at the moment, and the labor market is still relatively strong. Usually when the loans for the small businesses, which are still running the world, the small companies, especially in Germany, the so-called Mittelstand, if they are being drained of liquidity, then labor market will follow shortly after. And this chart, for those of you who are just listening in from the Bank of America Global Research, shows actually the deterioration in credit supply for small businesses, while there's still a strong labor sentiment chart in there. What's your take on that? Have I got you, Nic?
You try very well. I don't look at things like this. Obviously, I'm a kind of a one-man band, as it were, and I look at I look at leading indicators, which have been pretty naff since July, August last year. But leading indicators don't lead; they're not a good signal for either the economy, nor are they a good signal necessarily for the stock market. And so I ignore them. But I use them in conjunction with coincident indicators. So if you go on the Fed website, the St. Louis Federal Reserve website, I chart there two things which you've mentioned. One is coincident indicators versus the leading indicators. And when coincident indicators are below a threshold, well, then you may well get a recession. Right now, they are away from that level, and therefore, nothing to see here still. So when that turns, I'll tell you, but it hasn't. Therefore, I don't need to say anything. The other thing I look on the Fed website is, so you've come up about sort of small access to loans from small businesses. Well, we don't know, again, where they get the data, but on the Fed website, there is a consolidation, and I trust actually the Federal Reserve, their data, the bank lending across all commercial banks, which dropped at the time of the Silicon Valley collapse or whatever it was. And since then, there has been no drop in bank lending. And the latest number that I saw, I can't remember what date it was, it probably was 31st of May, somewhere like that, showed me that, again, the businesses seem to be getting their money from where, I don't know where B of A get their data from, but, according to the Fed website, they are getting it. And let me say one thing, if they stopped getting it, right? If banks stopped lending, and if that number that I look at on the Fed website starts to go down and the economy does suffer, it comes back to the thesis. And the thesis basically says, well, the debts that I've got as a country are so huge, I need tax revenue. I don't get tax revenue when the economy goes down. And as we know anyway, the politicians want command and control. They ain't going to command anything if the economy, falls apart. So I guarantee you that the central banks will be back in printing. And, forget what they say now. They, if they have a choice between the economy going down and inflation, I think they will save the economy at the end of the day. I don't care what they say.
Am I fair in my assumption, just for a second, if I think my thesis of doomsday is correct? First of all, we need some sort of catalyst, to let the whole thing break down. I'll come to that at the end in a minute, what I think, what could be the catalyst, the stock market. But anyway, if you are right, are we just building up a cycle which will inevitably in the next cycle then need to doomsday, when the governments or the central banks simply cannot be in control anymore? At the moment they are. I'm inclined to believe you. They can't let the whole ship sink. But at one point they will reach a situation where they're not able to defend the status quo anymore. Is that the next cycle or the next cycle if we don't see it now?
It really depends on what type of person you are, because I'm a believer. I used to work with someone who used to say quite regularly, "It will be fine," and
I love that.
Because of that, I must say I've looked more on the positive side than the negative side. So I don't believe that there is any problem big enough that can't be solved, right? And if that means print, if that means invest, it means that there is always a solution. They're currently thinking too much about misallocation of capital at the end of the day. As I say, if they are investing so much in this climate thing, whereas the benefit is, let's just say, marginal to the human race, right? And is it perhaps better to invest in another way? You'll figure that out as you go down the road. I mean, nobody really knows the answer today. And there aren't enough studies. Probably there are too many people scared to say things about that. But, I don't think there's a problem that's big enough that can't be solved. And right now, the fundamental problem that the world faces, apart from all the politics, which is probably also driven because of the debt that everybody has got, I think the fundamental problem is a huge amount of debt, and they just have to inflate their way out of it.
I hope for our sakes that the next generation will have the trouble and we are just scaling by. On a shorter term, I've called it the tactical brief. Obviously, I'm interested in shorter term trades as well. And I want to finish that off with a couple of interesting slides I found about the sentiment in the market, individual investors. And for those of you who are just listening, it's a chart started on January the 11th and is up to the June of the 7th. And it simply shows you the bullish, neutral, and bearish sentiment in the United States for the next 6 months. And what we can see here is June individual investors are as bullish as they have been since the beginning of the year, and the bearish sentiment is the smallest we've seen, and then there's the usual bunch of neutral investors right in the middle. I thought for a tactical perspective, we are at very interesting, well, chart levels at the moment, so especially if you focus on the S&P, and people have, that's the CNN Fear and Greed Index. We are in the position of extreme greed again in the market. So my shorter term view now, and now really talking about shorter term view, is it is time for a correction, isn't it, Nic?
Well, okay. So my point on that fear and greed thing, the chart you had before, is it, is this a reliable signal? And sentiment is usually very, very good, but frankly, this chart has been around for everybody to see, and yet everybody I know and see on YouTube and whatever since January the 11th has been bearish. So irrespective of, so they always sort of roll out charts like this at certain times. Are we at a point where we could get a correction? Yeah, absolutely. And I think I said that the last call, 5% move down to 4,100 or thereabouts, or 4,000 is probably not unreasonable as a pause before we go back up, because we will go back up. Yep. And we go up and down in waves, as you know from my things I do. So yeah, I mean, kind of it would fit with one of the counts I've got. We have a retracement, and okay, but it doesn't, this does not say 1929. That's what it doesn't say, right? It just says, people have got a bit sort of, they were heavily bearish up until now. And then we kind of broke through the last all-time high at 4195, and perhaps they've kind of all clamored to get back onto the wagon and say, okay, well, therefore we've got to stop and reverse, and maybe that's just going to top and tail them. But as a long-term kind of thing, yeah, I mean, this is something I'd use in my charting, but it wouldn't necessarily be the determining factor. Yeah. This is like an RSI indicator for me, or something else,
Well, one of my colleagues in the United States, Tim, one of my quants, where you actually can also see the video where we analyzed, I think it is in German, on our channel for 1.5 hours, if you're really into geek stuff. He said, with the CPI numbers now coming, on a year-on-year basis, June CPI next week was the third worst figure. So it's actually, there should be a decline in CPI, which could fertilize the market to an crack up to the upside. Interesting, it is in August. In August, we had the lowest year-on-year comparison for the base effect. Numbers in CPI last year, they were at 0. So that could be, if inflation resurfaces, it will also fight against the base effect for the previous year. He said maybe the scenario is built up that we'll see a crack up boom, because the numbers now, CPI numbers, PPI numbers, are reconfirming that, yeah, everything is fine, everything is hunky-dory, and there will be a huge rug pull in August in there. I thought that was a very, very interesting thought for positioning. However, maybe I can close with that, because last week I gave out a trade recommendation, not a recommendation. Obviously, we can't do recommendations here. Read the risk disclaimer, which is at the front. But we've reached now these levels. We are at the 4,300 chart level, and volatility has come into the bracket of 10-15% percentile where it has traded. So this is now the levels that I've reached for this trade, where I consider both sides. We could have a crack up boom to the upside, or we could break down with an increase in volatility. So as I brought it up last week, I thought I'll just pass the review again, telling you that we've now reached these levels, why I think it's an interesting chance risk relationship in this trade. If Nic is right, fantastic. If I'm right, fantastic as well. The only thing that could hurt it if we are going sideways and nobody knows for the next couple of months what's going to happen. So that is my bit of housekeeping about what I put out. I think Japan will stay a conversational topic here. We just have to find out or figure out the right trade for this scenario, Nic.
Yes, I was lucky enough to attend a presentation from somebody, an expert on Japan. somebody who actually analyzes the companies out there. And he said, well, you know what? If you like the presentation from Apple about their sort of VR thing,
fucking
their
awesome.
goggles.
Fucking awesome. I saw that.
I knew you'd come up with a
you
good
know
expression.
of what I thought. I'm very critical of Apple, yeah? But I saw this headset and I immediately had to think of Iron Man. They have given us the Iron Man. When you see Robert Downey Jr. sitting in his lap and doing this, that, and the other, because I have a couple of screens in front of me, as you probably do. And I thought, wow, if I could sit at my desk, put this thing on and have 4 or 5 virtual screens in front of me where I have everything under control and could just swish and swipe, awesome. Too early to buy Apple for that. I want to see this thing live in action. But the moment you see me here with glasses, you have to go long Apple. Wherever the price is at this moment, it will be a game changer if it delivers what it promises. Sorry.
That's okay. So that's not what the guy said, by the way. He actually said, well, if you like these VR things, there's a company in Tokyo, and he named it, I can't remember the name. And he said, look, they've been working on these things for 10 years. In fact, they have already got $250 million worth of sales in it. They have already had the experience of it. They've already been selling this stuff. They're much more kind of, they don't look so like, you know, Iron Man stuff. They look like things that you'd probably wear, you know, when you go shopping. But he said, look, if you really like that sector, you know, there's already a company out there that does this. As I say, there's so many kind of hidden gems in Japan because everyone's forgotten about it. Everyone's underweight. Everyone's like, oh, yeah, they kind of blew up in the 80s and then coming back, you know, population, demography, all of this stuff. They're clever people. And, you know, they've been working on some stuff. They haven't fallen asleep in this time. So there is some good stuff for people who look. Maybe your man in Hong Kong will almost certainly find some stuff.
I will ask Anand. Maybe let me finish, because that was one of the points advice in the German video we have out, which I gave to the students, how to come up with your buys. And I said one of the most important things, and you just mentioned it, look after the things you do not see, people are not talking about. And that is what we have seen with Japan now for a while. People weren't talking about it anymore. This company you just mentioned, whose name I want to have in the after show party to look at their products. This is exactly what I mean with you have to look what you're not seeing. You know what that reminds me of? 2.5 years ago, when nobody wanted to touch energy with a barge pole.
Absolutely. Absolutely.
Nic, on this marvelous note, I can only thank you very, very much again. You enlightened me, and I think our contrarian views on occasions will bring most value to our viewers. And I say to you, thank you very much for being our guests again. I hope we can grow this community, which will happen if you share and comment. Then the algos will pass it on to other people who want to see 2 old guys conversing in English about markets. I say thank you. Nic, thank you very much. And I hope I see you next week on Sunday again, or whenever you watch this video.
Looking forward.
Bye-bye.